Hey guys, what's going on? I just want to go over a quick lesson of what I use to give me like a daily bias the next day. It's kind of like a next day model, to where basically we know previous day highs and lows are strong liquidity points. Like the market is always attacking liquidity, right? Like, but and then especially on the higher time frame, the daily, like the market's always going to be sweeping the highs and the lows. And with this method, you can always have a target in mind based on a previous candle's close of what low or what high to expect the next day. So at least every day when you sit down at your computer to trade the markets, you at least have one target every single morning that you know should hit. So if you can find a short or a long position that's showing momentum to that price, you know you can enter and then target that high or low. So it's always you're basically starting off with a head start to where you know where price should at least deliver to uh, one time every single day. So with that, I'm going to get into the video and kind of show you. I don't know. We'll start right here. So right here we have this uh, bullish spinning top, I guess we'll call it. So this bullish spinning top, this bearish candle here closes below the body of this bullish candle. So we would expect the low of this candle to be ran the next day. You see, we do. Next day, this this bullish candle closes back inside the range of this bearish candle, showing us price probably wants to move back at least higher to take out at least this high. You see, we take out that high, and then we have a bearish candle close back inside the range of this bullish candle. So next day, we would expect the low of this candle to be taken out. So boom. So also important to note, futures move 24/5. You guys all know that. We could take these lows or highs in London or Asia. So it's just important to note that and make sure we have not swept anything prior to the start of the New York session. But another thing to note, so like okay, so we have a bearish close here. We take out this low, and usually not okay. I can't say usually, but sometimes we'll take the low, and then we will show displacement back towards the other low or high. And so like in this case, we sweep this low, and then we have strong displacement back to the upside. So then you know, okay, we're probably targeting with this kind of displacement, we're probably going for this high. So then you can use this displacement, find whatever long model setup you use to enter the markets, you can then get in and then potentially target this high. It's not always going to deliver to that high. You know, eventually it probably will. You see, like this bullish candle, we swept this low. We did not deliver to the high, but we don't have to. I mean, we already took out the low. We end up taking it here, but still with displacement, you know price has a draw that is much higher. So you can use that. So then we sweep this low. This candle closes above this bearish one. You would expect this high to be taken the next day. This candle closes above this one. You would expect higher the next day. This one closes above. This candle closes above this one. You would expect higher the next day. Okay. This one closes above this one. You would expect higher the next day. You see, we take the high. Bearish candle closes back inside the range of this bullish one. Next day, we should expect at least this bearish candle's low to be taken, which it is. Next day, you see we have this bearish candle close below this one. You would expect lower. However, good example here. We have an inside day. An inside day, which most of you should know, just means the lows and highs of this day did not sweep a previous high or low of the last day. So the next day, in a couple of years, like backtesting a couple of years worth of dailies, to have the confidence to say that this is a good method, you know, to build my confidence to show that this method works. A lot of times the inside day doesn't always mean like this will go higher. This candle could either take this low, or it could work this way. It's just very indecisive. That's where you just need to use price action intraday, and then like there's probably a lot of bearish momentum in the morning hours that you could have used to sweep this low, and then obviously any long setups here you could have taken too. But moving on, um, bearish so bearish close back inside the range of this one. You would expect this low to be taken next day. You see that's what happens. Close this candle closes below this one. You would expect this low, so on, so on. Um, this candle closes back above inside the range of this bearish one. So the next day you would expect this high to be taken, which it is, and then this one does not work because we closed above. We didn't really close above the wick, which I mean it's mainly the body from what I've seen. But one second here. But this is where you need to know where you are on the charts. Look where you would be longing into if you were trying to long on this candle back into a daily fair value gap. So you see we rejected that daily FEG, came back down. So this is where you need to know. Well, we rejected hard this day from this daily FEG. Like I'm gonna need some serious bullish momentum to prove to me that we actually want to go up and take this high. And without that bullish momentum, you obviously would not take a trade. So that's how you would save yourself like on that. And then obviously this candle closes below this one, you would expect lower. So this is the current day candle for 27 October. So Monday, you see bullish close back inside. You would maybe expect this high to be taken this coming Monday. However, ES looks a little bit different. ES did take the low because close below. This one takes out the low. You're waiting on a bullish candle to close back inside before you want to see higher prices. And wrong chart there. NQ. Okay, and then so obviously maybe NQ doesn't. Maybe this one doesn't work. This is why it's important to pay attention to ES and NQ. You could have uncorrelation, so you need to pay attention to that as well. But if both are correlated, from what I've seen, it's at least like a 82% hit. With that, I just want to go back to like I don't know. We'll go back to like August. We'll go back to the start of August, and we'll just do a quick rundown here and kind of see. Let's go to replay mode. We'll test this quick. Okay, so this one here, kind of tough. Of course, I would start on a doji. It's worth noting, dojis are very 50-50. Obviously, this one kind of worked. We still a bearish close back inside of here. We still took the low, closed above, took out this high, closed above, took out this high. This one closed back down inside. It did not work. A good example why dojis are 50-50. So you should not you should wait for price action the next morning to kind of show you. A lot of times dojis end up being outside days the next day, taking out both sides, and then that gives you your your price projection for the next couple days. Also, we're noting it's the big daily FEG here. You see price kept rejecting it, and now we're just chopping. But moving on, this candle closes below the doji here. You would expect lower. Okay, this one, this body closes below this one. You would expect this low to be ran. It does. Another doji, 50-50, but it closes back inside, takes out the high. So this candle closes above the doji. You would expect this high to be taken. Looks like it was closed. Maybe equal highs might have taken it by a penny. Looks like it did take the high by a little bit. Takes the high, closes back inside the range of this bullish candle, comes back down. Next day you take out the low from this candle. Hard to draw. I'm not gonna waste time making it perfect, but you get the point. We took the low. Um, Body closes below. We did not, and then the next candle was higher. So you did not get this low here. Again, it's not 100%. It's more like 80, 82. So, but it's still a great tool to have in your toolbox. So obviously here, bullish candle above. This doji gets above it. We're back kind of inside the range of this wick. So I'm just gonna send this first candle and exactly what you would probably expect. So looking at this, we should see lower a new low here. Whoops. See, that's what we get because this candle closed below this the body of this doji. Candle closes below, we should see lower here, lower. Okay, and then we kind of have a doji, so it's kind of 50-50. It's a good candle. Plus you would realize, oh, hey, look, we're delivering from a daily FEG. So might expect the high to be taken, and then you see this is a good example of like, doji spinning tops, indecision candles. Both sides get taken. So we close below. You would expect this low to be taken the next day, which it barely does, and then you get some nice displacement back up. So our next target would be this high, and we're probably headed back to this one. It doesn't have to be the same day, but we'll just draw it just in case. But you see, it still works because we still take out this high. We close back below. We're still on a daily FEG here, so you have to be careful, especially with a strong wick like that. But you see, it still works. We still take the low. You would expect lower here. We take out the low. A nasty doji candle here off this daily order block. So I'm just gonna send this one what you expect as exactly what you would expect. Daily order block rejected, um, and you would expect lower there. So obviously with the doji, you would go to the higher time frame. You would go to your lower time frames, your 15, your hourly charting. Then you would have a good idea of should you expect the lower high as well. So got to keep that in mind. I have back tested this on like the hourly chart. It does work very well too. So you could use this on like the hourly time frame to kind of get an idea. Should we take out the last candle's hourly high or low? So here we would expect lower. We take the low and we displace back up. So we would expect this high the next day, of course. We take the high and we close back. This candle closes back inside the range of this one. We take the low. You would expect lower to take out that low. You expect lower, and now we have a doji. So a doji like that at the low, if you look left, did we take any liquidity? We kind of filled in this daily gap here. So obviously you would go to the lower time frame and kind of see, but you would probably expect bullish the next day, right? Like you get a candle like that after like a strong three black candles down, and you entered a gap. So strong candle. This candle closes above the doji. We take the high. This candle closes back inside the range of this bullish one. Tells us we should expect at least this low to be ran the next day. We do not get. See, it's not always going to work, but most of the time it does. So then we have higher. So we would expect higher. Look at you. What a nice range day here. Um, we took the high and then we took the low. So you could have targeted both that day. So now this is where you have to be careful. We're back in a daily FEG here and a daily inverse. So you just have to be careful. Maybe we take the low and go back up. There we go. Um, I guess I already have a line. So here we would probably expect higher prices, higher again, higher again, higher again, higher again, and then you see we finally take that high, and now we have a spinning top type candle back inside the body of this one, which means we'd probably see lower prices the next day. You see we get it, and then we close back inside here. We do not go higher. So now we're back below here, but you have to also remember daily FEG sitting here. But see if we take the low still. We still do. And then this is where you just know like daily order block here and daily FEG sense price higher. You just have to be smart and know where you are on your higher time frames as well, and use price action intraday. But still, it shows you why we have such. This can be used for good targets. So close back above. We take the high. We do not take a new high there. So which we don't have to because obviously we took this, daily liquidity, and it's another example of knowing where you are on the charts. But yeah, so we should see lower, take the low. Okay, this bullish candle closes back inside this bearish here, higher. So this one closes above here. You would expect this high to be ran. But you see we do, just barely, and then we dump back down. So should expect that low to be taken. expect a high. We do not get it, but that's okay. And then this is kind of 50-50 because just because of it's a nice wick. We do close back below, but we're very very close. But you see, it still works. You just do use intraday price action. So low, we take the low, we close back inside, and then you see we take the low, but we still expected bullish price action eventually there. So this one did not work. You would expect lower. You'd expect higher because this doji closed back inside. This candle closed above, and we go higher. And then this one's just a 50-50 doji just because we took the highs here. We didn't close back inside, but you would probably expect very choppy action at that point. So this one closes higher. We do not take the high, but you can pretty much get the point. That's some nice liquidity building up there, and then see, and then you just keep on running it through. Like it's just pretty insane how accurate this is and how well you can use this for finding targets for the next day. So with that, I think I covered pretty much everything. I hope you guys took something out of this. Just know it's not 100%. Nothing's ever going to be 100%, but it just gives you a great edge going into the markets every single morning. So with that, hope you guys have a wonderful day, and we'll see you later.